Hey guys, Mike here. So it's definitely going to be an interesting week this week. A lot of economic data coming out, which I think a lot more people are going to start paying attention to because of what's going on with all the indicators talking about recession and all that good stuff. And so I think that'll get a lot more looks at it. Plus we got jobs data coming out and the market's going to love that. But we're going to talk about something, it was pretty funny. Probably in December, maybe November, December, people come out saying, oh man, it's a new bull market. And the reason why it's going to be that way is because you're going to have new leadership. So, because tech was lagging behind. And they said, don't worry, the industrials, energy, all this stuff is going to, just take off. And that's going to be the new leadership, right? Well, I'm going to show you something that's been happening. And so you get to make up your mind off of this and say, are we in a new bull market, not in a new bull market, or what? Because what they were saying so far is not coming true at all. It actually reversed. They were right. Then it totally reversed, right? So we're going to go into all that. And really, the problem with looking at the Qs and the SPY and anything to do with tech for that instance and not being able to get a actual clear picture of what's going on. And it's something I've never seen it before, but some people say, oh yeah, this is what happens in a new bull run, And so let me know in the comments what you think about that. We'll have to see. But I want to start with this because I thought it was funny. I'm one of those people, if you don't know me, you always find the positive even in the worst situations, right? There's always something good to look at. Well, obviously Cathie Woods and her shareholders have been completely decimated, right? So she comes out the other day, as you can see right here, and she says, well, the good news is, I think she lost $2 billion last year, whatever it was. And she says, the good news is, though, with all those future gains we're going to have, we get to write that off because you can carry your losses forward, right, to decrease your taxes. So, I applaud her for coming up with the positive. I just find it kind of funny, though, to actually celebrate losing that much money. But, hey, that's the way you got to do it, right, and just keep the positive going. So, anyway, I thought it was funny. Now, here's the problem with the Qs. And let me know if you've ever seen anything like this before in any other bear market, coming out of a bear market, anything like that. Right now, on the NASDAQ 100, there are 7 stocks, 7 out of 100, that make up 51% of the index now. Can you believe that? 7. 2 of them make up almost 25, one quarter, Microsoft and Apple, right? Look at Apple alone. On the S&P 500 information technology sector, it makes up almost 30% of it all by itself. I mean, that is absolutely nuts. And so let me know in the comments, have you ever seen that before, where 7 stocks made up that much of a major index before? And the problem is because, if the Qs are going up or they're going down, in your mind you think, oh, man, I must be just doing horrible. Well, the truth is, it just depends on those 7 stocks. And that's what I've been saying for months. You just watch Apple, watch Microsoft, watch these stocks. That's how you're going to know where the indexes are going, because the other, 92, because Google has 2 classes of shares, I guess it don't much matter what they do, to be honest with you. I mean, they would have to fall, all of them, by double digits to really affect anything. But it's these stocks right here making up so much of these indexes. That's what's holding it up. And so it may look great, like, oh, we're going up great. And you go, well, actually, it's just 7 stocks. That's all it is that is holding it up, right? And that can be good and bad, right? Because when you look, I mean, right now what you have is a lot of rising wedges, right? And rising wedges are, actually bearish, supposed to be. But, we'll see if they play out correctly. And you can see Apple. I mean, it's in a rising wedge. You can see right there. And you can see it's about to get overbought. Looks like the MACD wants to roll over. We'll see. Microsoft, another rising wedge coming up. Bounced off, got rejected a few days ago. Looks like the MACD wants to roll over. Almost getting into overbought territory as well in the daily. And so, we look at those. And then you got Tesla. Again, what happens? That trend line I've been talking about seems like forever now. Another major rejection a few days ago off of it. And it's been coming down since. And so it's just a hard place for this to get through right now. And again, it's got support right there around like 180, 182. But it really depends on what the market wants to do. And then, of course, NVIDIA, I'm going to say one thing about this, because I'm going to do a whole video for the members on the semiconductor sector and stuff. Look at this thing. 62% above the 200-day moving average is what it was at. Now it's 58%. And if you get anything out of this, guys, please hit that like and subscribe button. I really appreciate it. And if you're new, think about subscribing. If you like this content, I really appreciate your support. And, of course, I bring up those stocks because that's 4 of the main 7 stocks, right? And I bring up NVIDIA and the 200-day moving average because if you look at the chart, if it gradually moves up, it sometimes will stay anywhere 30 to 40% above if it gradually moves up. When it has those big moves up, like that really fast, like it's been doing, my finger's the 200-day moving average. This is NVIDIA. It acts as a rubber band. And the tighter it gets, boom, the faster NVIDIA falls. Same thing on this rebound. It got way below that 200, and you saw the shoot back up, right? And so that's something to keep in mind with that. Again, I'm gonna do a whole video on that for the members, but you know, the big thing to look at is also in these charts, I like to be fair, right? You can pull these charts up when you look at these formations and patterns and things like that. Just like with Apple, what I say about Apple? If I want to pull a bullish chart of Apple, make it look bullish, inverse head and shoulders. Showed it to you a week ago. That's what's been playing out ever since. Inverse head and shoulders can be bullish. Means the stock will probably move up or can move up, right? And so, and with some of these, you're looking at, you know, support resistance flips, right? Tesla had one, NVIDIA had one. And so I think Amazon's trying to have one, Google's trying to have one around the 105, 106 area. And so, you know, but the market will go as these stocks go, especially the ones I just went over, right? Not so much Google and Amazon because they've kind of been hammered or whatever, even though Google's been moving up slowly and quietly lately. But, you know, looking at the Qs, I'll show you exactly what I'm talking about. If I look at this, there's that, and this is coming into play on a lot of charts, the 2020 anchored VWAP, right? You can see it broke above it right there. And here's this trend line. So, of course, if it can break above this trend line, you go, okay, well, that's going to be a breakout, right? If it gets above there, retest, okay, we get a support resistance flip, that's great. But here, let me go ahead and show you something that might be bearish. Well, what if that's a double top, right? We just had a double top back here, it played out, and it went down, right? And so now you can see right here, that can be seen as a double top, right? And if that plays out, it's going to bring us back down into the chop box that we've been in, which what seems like forever, but it goes back to September of last year. So, you know, roughly 6 months. And so again, you know, you can look at any of these, right, and go, well, that's bullish, that's bearish. But let's be honest with you. For me, all I'm doing, I'm looking at the options market. What's the options market pricing in? What is it? Where does it think it's going to move? Where can it move to? Where is the market going to be allowed to move to, right? And I showed you with the SPY, was it Friday? You know, there's so many puts out there. It's just absolutely insane. And so, again, the sentiment tends to be bearish. But what happened? The stock market tends to kind of want to continue to grind up, right? It's amazing how that works. And then when the sentiment flips, which I think a lot of us feel like this, when it finally flips to too bullish, and we just seen this, what, 3 months ago, where it was like, oh man, we were up, the fear and greed index was up to greed again. I think it actually went to extreme greed at one point in time. And then magically the market comes down. It's amazing how that works. But it's really hard to fall when you're sitting here with terrible sentiment and a lot of puts in there. But going back to, you know, what everybody's talking about, they said, oh, there's a new bull market. There's going to be new leadership because that's how it works, coming out of every bear market. And again, what was the leadership coming out of 08? It was tech, right? Google and all them took off, Apple, everything took off. Well, here's 2023's performance, right? If it's supposed to be industrials and finance and healthcare and all this other stuff, I'm missing it because here is tech right here. Microsoft's up 17% on the year, 24% for Apple, 20% quietly for Google, which I don't think anybody would have guessed that if you actually asked them. Meta's up huge. Amazon's up 17%. Tesla's up 55%. Well, there's financials. That don't look so hot. You know, there's healthcare. It's just been getting hammered, right? Here's energy, right? That was the big to-do right there with energy, and that one just broke a major trend line, by the way. And if you want to look at it a different way, you can just look right here on the chart here. I got a whole bunch of these sectors pulled up for you, and you can see what's the two at the top, right? Consumer discretionary and tech. What you got below? Everything in the negatives, right? You can look at them for yourself here. Energy, financials, utilities, you name it. And so, you know, that's what's leading the way so far in the first quarter. And so the question has to be asked, if we're supposed to be going to this new bull market and supposed to have new leadership, I don't see it. I see the old leadership. Is this the new bull market? Is this what it is? And we were talking about this in the Discord. It was like, you know, what is the one like environment people tell you, don't get into tech, it should be doing terrible. It's this environment. High interest rates, right? And of course, we'll throw high inflation in there. I guess that's bad for everything. But, you know, this environment is like the worst for it, and yet it's leading the way right now. So the question is, you got to ask yourself, is that a new bull market, or is it just being pumped up and getting ready to get dumped? That's really the big thing, right? And so, because, you know, 1 plus 1 is not adding up to 2 right now. That's just the way it is. And so, but when we're bottoming, .com, 08, 2020, I think when you look back, you see tech was roaring, right? I never really got into that whole new leadership thing, but, you know, a lot of people were calling for it. It's going to be new leadership. And so, not saying that's not going to happen, but if we're in the bottoming process now, supposedly, and, you know, moving up, Well, tech is leading the way. So, and the things that are supposed to be going up are going up. And so that's one thing you need to keep in mind for yourself. Or, again, are we just getting ready to get rug pulled? It's a hard thing to figure out because when I did a video on the business model and things like that, you can see plain as day 2020 broke it, the business cycle I'm talking about. And so, but when you look right now, what's happening is bonds should be going up because yields should be coming down. But also what should be happening is if all that plays out is a recession, right? Which everything pretty much goes down, especially tech. And so that's, let me know in the comments what you think about that. I know it's like a lot of stuff there, but it's, and it is confusing. I think people will tell you it's not confusing. They're lying through their teeth or just, I don't know, in denial or something. But, or they just fully believe, yeah, this is a new bull market. We're in it and we're heading higher somehow in this environment. That's just the way it is. And we're going to have quantitative easing and the markets are going to move up in the face of high rates, high inflation, no stimulus checks, and all this other stuff. I mean, that's pretty much what it comes down to. And like I told you, the two things throwing everything out of whack, and I had a long conversation last night with my neighbor about this, is the obviously the employment status of everybody. Everybody's still got jobs, and the fact now that everybody's fleeing to money markets with all this money, and they can pull between 4.75% now. And so if you're telling me there's, I don't know, I read a stat, there's like $2 trillion sitting in money market accounts. You do the math on that one, that's a lot of money being generated there. So it's a weird time, to say the least, for sure. Now this week coming up, we do have some earnings, which I'm going to be watching. Let me know what earnings you're going to be watching in the comments. You're going to have Carnival. Are we traveling? I'm curious to see it. You go over to Tuesday, and there is Micron, because a lot of people are going to be watching this stock report because obviously semiconductors have been on a tear. They are cyclical. We get to see how long it's going to last, but it doesn't seem like what's going on. You got Lululemon, selling $300 pair of warm-up pants and stuff that people like to buy. Paycheck and Cintas, something to pay attention to, obviously, just to see about employment, because Cintas is obviously the uniform company. And so, you can look at a few others in there if you want to, but those to me are the main ones to be watching. And then economic-wise, I said there's going to be a lot of stuff coming out, a lot of Fed presidents speaking this week. We'll see what they have to say, but I think this will start getting more attention now, and it's going to be like the Dallas Fed Manufacturing Index. Is that coming back? Or are we kind of stuck in it, and we're still going to see the slowdown happen? Obviously, retail inventories, X minus autos and all that stuff will come into play. Keep scrolling down, you can see a whole bunch of different stuff. But, the Case-Shiller home prices, house price index, the Richmond Fed manufacturing shipments, scroll all the way down to all that good stuff, which tells us about the economy, how's it doing. And then, of course, March 29th, all about the real estate industry, right? And it's actually been doing pretty dang decent, believe it or not, which is kind of surprising, but it has been. And, you look over here, obviously the 30th, we're coming in here with continuous jobless claims, initial jobless claims, GDP sales, quarter over quarter, all kinds of fun stuff, GDP price index. So that's going to show us a few things. And then, of course, more Fed speakers. And then the 31st, obviously PCE price index month over month, personal income, PCE price index year over year, personal spending month over month, consumer sentiment. I don't know. It's going to be interesting to see what we think about this one. But because sentiment does actually matter, believe it or not, right? And then you'll have a lot more Fed presidents speaking out, right? So let me know in the comments what you think this week's going to be. Green, you think we're going to end up just staying in this range, just grinding away to the right and the side, going up 1% one day, down 1% the next. Our financials finally going to make a comeback and stuff because Janet Yellen was speaking Friday, and it was a hot mess what she was saying. And you see a lot of senators and stuff trying to figure out, are their commercial banks safe? Are you going to back them 100%, these depositors? And her answer was basically no. It just depends if they meet these rules and stuff like that, right? And so that's a whole another ball game. But that just goes to what's the sentiment in the banking industry. Do people feel safe? And I would assume the biggest winners is online banks, right? Because that's one thing, it didn't even dawn on me because I don't do it. I don't do online banking on my phone. But, my neighbor does. And I was like, when the Fed president said, oh, it shocked us how fast the bank run was, I was like, well, yeah, I guess I forgot. Yeah, people just go on their phone and go, see ya, transfer the money and be done with it. So, yeah, they can, which is probably why they stepped in so fast. But yeah, there can be a bank run with the quickness. But you know, we talked on Discord. Sure, it has been overblown? Yes, probably. It should be over? Yes, because they're pretty much backing anything anyway. Banks are borrowing money like crazy. But again, there's just so much stuff on their balance sheets, the off-balance sheet stuff that we just don't even know about. And all that's good until it's not good, right? We've seen, you can't, and it don't matter what, there's post-call deposit spin, right? But you just got to see what shoe drops next. I mean, that's just the way it is. Nobody can predict if that's going to happen or not. You saw how fast these banks got to run on them, right? And how fast stuff happens. And so, you know, that's just the fun part of the system, the fun part of the game, I guess. Well, good to see this week. And, you know, hit the like, subscribe button if you got anything out of it. Really appreciate it, guys. And I'll see you for a fun day tomorrow for sure.